We often talk about third-party fraud on this show, so you probably know kind of what that means. It's when one person steals another person's identity with an objective to commit a financial crime. But there's another type of fraud. It's called first-party fraud. What is first-party fraud? Cherolle Prince is Director of Fraud and Identity Management at Equifax Canada, and she joins us now to talk about what that is and why it's on the rise. Hello, Cherolle. Thank you for joining us.
Hello, I'm glad to be here. Thanks for having me.
Equifax Canada reports more than a 30% increase in first-party fraud year over year. We got to start with a definition. What does this actually mean?
Absolutely. So, first party fraud really involves an applicant who's using their own identity to misrepresent themselves. So, they may misrepresent their financial information on an application to ensure that they'll be able to qualify for the credit.
And what would be some ways in which they would do that?
So, a common theme that we see is around their financials. So, as part of the application process, consumers will provide evidence that shows their income and employment, for example. What we do see is a number of consumers are quite comfortable misrepresenting the information. So, providing false documents or false statements or inflating their income, as an example, is something that we'll commonly see.
How do you catch that sort of thing? I mean, with third-party fraud, you catch it because someone like me calls and complains and they notice it on their credit score or some way. How do you catch first-party fraud?
First party fraud can be captured, again, looking a little bit closer at the application and the details that are provided to support the information. So it's about you leveraging tools, and right now, leveraging AI to sort of help identify some of the anomalies. We know fraudsters will use AI, and we know that even consumers themselves misrepresenting themselves might make a change to a document. They might copy a fraudulent document that's been used before. So we've seen this with income statements, bank statements. And so that tends to be a common theme where we are seeing them misrepresent their financials with documents that have maybe been circulated and used even in other frauds.
Now, a 30% increase year over year is a massive move, no matter what variable we're talking about. Is your hypothesis that people are doing this more or that you're more effective at catching them doing it?
I think we are actually seeing consumers doing this more.
Hmm.
And I say that because when we look at it's hard not to look at a lot of the economic trends that are out there impacting consumers today. It's quite difficult. I myself just filled up at Costco and it was nearly $90 to fill up my gas tank.
Yeah.
So when you look at all of the economic pressures that consumers are facing, what we tend to see is this is sort of a little bit of a lifeline that they see as okay to misrepresent or tell a little bit of a white lie just so they can help make ends meet. I can actually share from a recent survey we did earlier this year on consumers. Approximately about 12% Canadians agreed that during tough economic times, they've considered committing fraud themselves.
Wow. Ugh. It underscores just how desperate people are in their circumstances
Absolutely.
and how hard it is to make ends meet. I know you're not the RCMP, you're not a police force, you work for a credit bureau, but what are the consequences? Equifax picks this up, or a creditor picks this up. What happens?
Typically, what we will see, so lenders who do have good, strong fraud detection tools that are trying to pick up some of these anomalies or misrepresentations, what they'll tend to do is at that point, cancel the application. So if they are finding some information that does not align, they will either cancel the application itself or follow up with the client to revalidate or reconfirm some of the data that was provided.
Right. So, best case for the client would be, oops, I'm sorry. I didn't mean to
Yeah.
state my income incorrectly. Here's the real number.
Correct. And that can be the case, but what we are seeing is lenders are actually, with this increase that they all are likely seeing, they've actually started to clamp down a little bit on their strategies. From a lending perspective, they are not necessarily providing, especially credit cards, to every consumer. It is something where they've kind of tightened the belt, looking at who they're really going out and making these offers to, because the increase has been so significant.
The algorithm is quite detailed in terms of what produces the credit score, and we know the top variables around payment history and credit history, utilization, and all that sort of thing. Is there any way in which that algorithm catches people who, or accounts for people who have committed first party fraud?
Absolutely. There are some tools out there, and it's something that Equifax actually has been in the market and helping organizations sort of fight not just third party fraud, but where we do see elements of first party fraud. And so through leveraging solutions that allow you to share information, where if we see a consumer, for example, misrepresenting themselves with one lender, well, they're more than likely going to go to another lender, especially if it's been caught and identified. So they move on to the next lender to at least try. And we'll see this pattern. And it's by sharing and collaborating amongst lenders,
Mm.
looking at known fraud, we're able to share that. So if you've seen a misrepresentation at one institution, you're able to alert another institution that, hey, that information before didn't quite match my application. You might want to take a closer look.
Your data overall shows this pretty striking increase. As you dig into it, are there differences depending on whether or not people are applying for credit cards or car loans or mortgages? Is there any nuance in terms of where it manifests most frequently?
Absolutely. So we are definitely seeing certain areas that are a hotspot, and that would be credit cards, and as well as looking at sort of the whole banking and account opening process. Those tend to be areas, at least right now, where we are seeing a significant increase in first party fraud. And it makes sense. For a credit card, people are using it to catch up on payments, to pay grocery bills, to pay the gas bills. And so that tends to be an area that is targeted a little bit more. We're seeing a significant increase there with first party fraud actually doubling in credit cards and doubling as well in the banking area. So that tends to make more sense with the data.
What are some things that companies themselves are trying to do to address this sort of thing? You mentioned AI. I can imagine there's a tremendous amount of work in a world of open banking. People will have more access, at least to their own data. As you look to the future, what are some of the ways in which the sector will be trying to fight this?
So we're seeing it right now, where I talked about, fighting AI with AI. It's leveraging AI technology to take a deeper look at documents. We know there's a lot of good fakes out there. So these documents can pick up inconsistencies if there's been a change or there's been an anomaly in the application. So it's leveraging technology tools that are really going to help you identify where there is, this risk or gap, but it's also being able to have access to information about employment and income. And so, also through Equifax, there are tools and solutions that we have where you're able to validate the income and employment of a
Hmm.
consumer. And so, quite often, those tend to be the two key areas that we see compromised. So, if you're able to confirm that, yes, Cherolle Prince does in fact work at Equifax, but no, she's not making $250,000. You're able to say, okay, let me pause and take a closer look at this application. Those are some of the ways that lenders are trying to combat this ongoing, increase in first party fraud.
I can see why companies and why lenders would be really keen to try and reduce this, the same way retailers are very keen at reducing losses from shoplifting. The public doesn't really care about shoplifting, even when the retailer says, listen, it's actually raising the price you pay for goods because we have to find a way to offset these losses. What message do you think the general public, or what would they take away from this data point about the impact on lending and credit, and or is it going to be like, I don't really care because it doesn't affect me?
Well, it is interesting because we see in our survey data that, yeah, there is a little bit of a mix where a number of consumers, I believe approximately just over 70%, do believe that people will misrepresent themselves. But when we ask them, have they considered it? Went from 70 plus percent down to about 12%.
Mm.
So they think others will, but they don't necessarily reflect on themselves. So I do agree. I think a number of consumers are not necessarily concerned. They think it's a big bank, it's a big lender. But I think the bigger thing is the perception that I will be able to make ends meet. I just need to get over this hump, and then I will be better. And that's where we're seeing some of the shifts in the numbers. It's this persistent feeling of I'm not going to be able to make ends meet. And
Yeah.
I think we need to create a little bit more of awareness for consumers on how this impacts the entire economy.
Mm.
It changes lenders' strategies, so they start to tighten it and reduce the reality of giving consumers even smaller amounts of credit to help them get by.
Right. Chips away at trust on both sides.
Absolutely.
Interesting. Cherolle, thank you for joining us today. Really appreciate it.
Thank you for having me. It was a great discussion.
Cherolle Prince is Director of Fraud and Identity Management at Equifax, and she was here to talk about something you may not have heard about, or at least heard about in this way: first-party fraud. Equifax found it's up 30% year over year. Big number.